Move over to the vol. So realized vols, they hit a low early last week before we got the CPI number that obviously started to create some volatility. So we saw Bitcoin realized get as low as the low 20s. So that's the yellow line getting down here. Obviously, that has drifted back up. So we're back to about 35 realized now on Bitcoin, where we're at about 50, 55 on Ethereum. You can see the implied volatility had this big reset lower after the FOMC, but it has then bounced. Okay, so we're not as low as we were. Implied volatility on the week is lower on Ethereum by about 5 points, but it's actually slightly up on the week if we look at Bitcoin. That's on the 1 month maturity. Okay, that's the white line there. Basically, obviously the green line is the 1 week stuff, and the white line is the 1 month stuff. So generally we're keeping an eye on all of them, but it's the 1 month stuff that I typically quote when I say how much vol has moved. If you look at the carry side of things, obviously we had a positive 30 vols of carry there middle of last week. That has kind of collapsed a bit. Ethereum's gone back to about 10 vols, whilst we're about 15 vols on Bitcoin. And that's that convergence between implied and realized spreads. And then with the year end approaching, we do think, and liquidity dropping, it's possible for markets to go quiet and realize to head back to those lows of 20 odd on Bitcoin. If spot doesn't break the range and stays in that mid-range no man's land that we've talked about. But if we were to break the range and get something to trigger that, then the fact that there's poor liquidity in the market, we could get some outsized moves. So if you're going to sell the vol and you're going to hunt this positive carry that is still there, and it's not as juicy as it was last week at 30 vols, but if you're going to go and try and earn that carry and sell some vol, I think it makes a lot of sense to buy wings to keep yourself safe against any gaps that might occur, because this thing can be gappy in the face of low liquidity. Okay, and that doesn't just apply for crypto, that in general applies to all risk assets right now. Okay, moving on, we look at the term structures. So as we said, Bitcoin 1 month stuff actually finishing slightly higher. So you can see the green line shifting slightly up, whereas the weeklies were down. So collapsing back into contango, but really driven by the weeklies collapsing because they didn't have the event risk anymore, as that event risk was last week's news, and this week there is no real event risk, right? Ethereum, on the other hand, the whole curve kind of shifting down, collapsing into contango. So that's what we saw there, and therefore the spread curve shifting lower as well. So we've been flagging that we thought that the market would go after the risk premium given the low realized. We think risk premium is going to collapse everywhere. So SKEWs should be coming in, vol spread should be coming in, things like that. So definitely seeing that in the ETH Bitcoin vol spread, and that back end of the curve just touching just below 10 vols now. So that's the 6 month expiry. So that's what I've been keeping an eye on. And that's the stuff I've got my eye on to buy. So I want to get into that spread at sub 10. It's literally just touched it. And whilst, we're not seeing enough movement, I don't think, to think vols are suddenly going to run away to the upside. So I'm patiently waiting between now and year end to start accumulating some of that back end volatility in ETH. Sell some Bitcoin against it, maybe via a straddle or a strangle spread, something like that. So I own a bit of Ethereum vol. So when Ethereum does decide to finally break out of that triangle that we talked about versus Bitcoin, then we can benefit from that if the vol has a bit of a go, right? Or even if the realized just does well, we can have gamma exposure to that. That's the idea. Okay, so that's my game plan. And you can see here on the 6 month history, you can see how that spread has kind of evolved throughout the year, and we are kind of starting to get back towards the low end of this range, right? So that's what we're looking at. Okay, moving on to SKEW. If we see here, SKEW actually bounced on the week, right? So we had SKEW softened initially, a little downtick in SKEW on the CPI, was the market thought, we were going to get another squeeze to the upside. But as that faded and we rolled over and we got all this Binance news coming out, that sparked some fears that there might be another wave of selling, and as the integrity of exchanges gets tested again. And that obviously spooked markets. So some hedgers came back in, lifting puts, selling calls, risk reversal type structures, as you would typically see. I was doing the same sort of thing actually to get my hedge ratio back up, which we'll talk about in a bit. But in general, when you do see those sort of headlines, you shouldn't be surprised to see an uptick in put SKEW, and that's what we saw across both Bitcoin and Ethereum, right? And I don't really see SKEW cheapening much between here and year end. I think traders would be better off selling short dated local volatility to earn that premium, buying the wings or buying the downside to protect themselves. Because if we were to break, being short a load of SKEW is not the way to earn risk premium right now, right? You could blow up spectacularly if something was to trigger another liquidation event on low liquidity. So you don't really want to take that blow up risk, right? And the market seems very, very confident right now that the spike in vol, if it is going to come, is going to come to the downside, not to the upside, right? So even now, overnight, we just had a bounce of around 2-3% after the Bank of Japan. Don't ask me why, but for some reason, the market sees that a reason to buy Bitcoin. The fact that the Bank of Japan has pulled their bid from the bond market, which seemed a bit strange to me. But anyway, we've rallied, but it's not like vol's exploding at all on that rally, right? So in general, unless we really break some major levels to the upside, like above 20K on Bitcoin and above 1500 on ETH, vol is not going to really rally on a rally in spot. Whereas if we break to the downside, if we go below 1,000 or if we go below 15K on Bitcoin, then that's when all hell can break loose and these implied vols can shoot up again. And that's kind of what the SKEW is reflecting and already kind of trying to price that ahead of time, basically. And I don't think that situation is going to change anytime soon. Okay, so that's kind of where we are in terms of the relative value and what I'm seeing there. The individual dashboards aren't going to tell you anything different. Like I say, that we did see spot down 5% on the week, but it has bounced a couple of percent in Bitcoin overnight. Same thing, Ethereum kind of recovering from its lows. That was up around 3% overnight as well. It was at its lows down about 8% on the week. So you see that there. But yeah, nothing really to call out other than what I've already said. If we look at crypto option flows, Bitcoin dominated by call volumes, as was ETH. But we did see some short-dated put hedging coming in on the 30th of December and the 27th of Jan. So you can see here in the strike range of 12K to 16K puts getting scooped up after the vol had reset lower and markets continued to slide. So that makes sense. And then the big flow, really, the notable flow was these call spreads that went up in March and June 23. So generally, you can see these blue and red bars. So we're seeing the strikes in the 25K to 28K region, which is here. That was a buying of calls. And then there was a selling of calls in this region, which was your 36 to 50K area, and that was selling calls basically, right? So that was there was various call spreads that traded in various quantities, but in general, people were buying strikes in that mid 20K range, and they were selling higher up, right? And then and they actually did that with delta hedges. So whoever bought those, whether they did it with delta hedge and then unwound the delta hedge later to not have market impact, that might be one way they did it. Or they might be buying it from a vol perspective, thinking that, the long Vega exposure that you get, the gamma that you get from doing those call spreads, you're keeping the cost of that carry down by selling higher up options that are trading on what we call the call smile, which trades at an implied vol premium to the stuff that you're buying. So you're getting pretty nice Greeks from doing that. So it could be a vol trade, could be a naked trade, but that was the trade that was going up in Bitcoin upside in March and June. Looking at Ethereum, the really notable trades, the massive one was this call calendar. So March, we've been talking about this a few weeks back. Similar trade went up. March 23, June 23, call calendars being sold in around the 1800 to 1900 call area. So someone's selling a lot of June Vega on the upside, but rather than just selling it naked, they're buying March against it. Now, I don't know whether that's a roll, where they're rolling a March short into a June short, or whether they're just doing a fresh trade where they sell that and they cover some of their gamma by buying the March against it. But net, you look at those options, by selling that calendar, you can earn around $50 to sell that calendar, basically. So someone's thinking that that's a good sale, but that's been trading in big size. We're talking over 100,000 lots trading in that structure. And then outside of that, the only sort of notable flow was some buying going on of 1,300 and 1,400 calls in December expiry. So that's in 10 days time, some people opportunistically owning some upside premium there, which looks like it's probably going to go out worthless given how the market's trading. Okay. So that's the crypto flows. All right. That's it for this week. And we're not going to do one next week because obviously it's Christmas and there's really not going to be a lot to talk about. So we'll catch you in 2 weeks. Take care out there and have a very good Christmas and a happy New Year.